You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday. It is the 21st day of August, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. Now, when you join that way, you also have access to the chat box. This means you can ask questions, you can participate in the discussion, which we encourage. However, there will be days you're out of the office, maybe away from your desktop. Not to worry. Point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show. As it unfolds, you just won't have the chat box. We also stream live during this broadcast on Facebook, YouTube, and Twitter. The other 22 hours of the day, and of course weekends, we are streaming the gospel on CFRN radio to the four corners of the universe, as we have done since April of 2005. So, again, happy Friday to each and every one of you. Let's open with a word of prayer. Heavenly Father, we thank you for your abundant and abounding grace in our lives. Thank you, God, that we don't have to earn a drop of that mighty river of grace that flows freely for each and every one of us today. Thank you for the unexpected, unmerited favor that you've showered on my life and the lives of everyone listening to this broadcast. Help us all put ourselves directly in the path of your love and your grace. Help us to not neglect the disciplines. We need to meet with you regularly. We need to drink this water of life. We thank you for your love. In Jesus' name we pray. Amen. All right.
Amen.
Here we go. These are the numbers from around the world. The cash markets, the indices, as they call them. Starting here in the U.S., the Dow is up 73 points. NASDAQ up 28. S&P 500 up 3. Russell 2000, our man in the street, down 11. In the commodity basket, crude oil down $1.30, trading 41.52 last. That's a drop of about 3%. Gold down $4.50, trading 19.42 last. In the Asian markets at the close, Nikkei was up 39 points. Shanghai gained 16. The Hang Seng, that's our first mover and shaker of the whole bunch, up 322 points. That's a gain of a little over 1%. And in the European markets at the close, FTSE down 11, DAX down 65, CAC down 14. No movers, no shakers. That gives us a green day in Asia. It is a red day for the UK. And right now it's a mixed session here in the US of A, with the three major indices, three of the four in the green, the Dow, the NASDAQ, the S&P, and of course the Russell, our man in the street, a little bit underwater, just 11 points. Michael, take it away.
Okay, I got it. All right. I'm just seeing some disturbing things. Hang on. Let me get everything ready. There we go. Okay. I am ready.
Okay. It's all yours.
Here we go.
Locked and loaded.
All right. Good afternoon, everyone. Today is the 21st day of August, 2020. It's Friday. Happy Friday, usually. Today the markets were just rough. I'm going to get into it in just a minute, but if you haven't taken a free trial with us, you can go to EminiFuturesTrading.com and sign up there, or you can go here to the home page at CFRN.net, and where it says free 5-day trial, click on that. It's going to bring it here to EminiTradingSchool.com. You just got to fill in the information. It's really simple. We don't complicate things. We try to simplify things. Okay, so today, my recap today is going to be pretty quick because there wasn't a lot going on today. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 21st day of August, 2020. We made 12 ticks in gold and 12 ticks on the ES. Put us at plus 270 on the morning session. Today it took 16 minutes and one trade to get to the goal for the day. At that point, we're up $150 a contract, and we took a total of only 2 trades today. So on the month now, we're up $7,988. That's over 15 trading days, averaging $532 per contract per day. It's my 130th consecutive trading day where I got my goal. And now we're at $61,299. That's over 155 trading days, averaging $395 per contract per 2-hour trading day. And again, as you'll see, I missed most of the trades. Today I didn't, but that's because it just was not a good trading environment today. Let's jump into gold to begin with. All right, now you would think that this would be a great place to trade, and it was, but that was during the break. Okay. Now over here, let me move all the way back. All the way back here. Okay, now I was a couple of minutes late this morning, so I missed this trade and this trade. And then the market started to turn around. Looking at the YBR trades, there was one here that worked out really well, but regular trade setups, we didn't have any right there. Turning around, we had a trade here and here that I didn't get filled on. Yeah, and then it got really choppy. And, you know, it was like a slow grind down, is what Mike Reed used to say. But we didn't have any trade setups in this move right here. We did have a YBR short from right here. But it just got really choppy all through here. Then we had a short here and a short here that I missed. A short here that I got. A long right here that I missed. And oh goodness, look down here. You see, it's just not letting us do anything down here. And you know, I stick by the slingshot completely. Oh, looks like I had another long right here that I forgot to mark. And I picked up 5 ticks on that one. And I forgot to mark that one too. Just go and check and see how many ticks I did actually make. Anyway, then we got range bound, and I was worried about that. So I wanted to wait until we got out of it, and then we got out of it, and then it changed directions on us. And there was a long trade there and a long trade there. And then we get into the break, and in the break there was, you know, some nice trading. There was a short trade here, not there, right here, right there, right there, right there. And it had a lot of movement during the break. I don't know, gold's bouncing around so fast. That's why I'm missing marking these things up. But so the results are actually better than what I said. And it looks like I took a couple extra trades, more than I thought I did. But it did take 16 minutes in one trade to get the goal for the day. And I'll get to that in a minute. That was on the ES. All right. So this is the euro. Now the euro had a nice long right here. And I know some of the partners got their goal for the day on that. I didn't do anything with the euro today. And you know, then we get into this area right here. It was, you know, just really choppy after it made that nice move up. Then the slingshot was saying don't do anything and stay away from it. Then just recently there was a short from right here. All right, but I didn't do anything with the euro today. And crude oil, I didn't do anything with that either. It was another rough day with crude. There was a short right there. That would have been a profitable trade, and then we get into the break. And it looks like there were a couple of shorts, but what you don't know is where the low of the day was at the time. Okay, so that might have prevented you from taking the trade. On the ES, this was our first trade of the day, was right here. And we picked up 12 ticks on that. And that's where we got our goal for the day. There was one more trade right here that I didn't get filled on. If you're looking at the YBR trades, there were a couple of them. One here, one there. And that was about it. So it was a horrible trading day, to be honest with you. But, I mean, we ended up positive and everything was good. But, you know, if you follow the rules, trade the charts. Trade the charts. Do what the charts say. And follow the rules. Then you would have survived a day like today. But today was, I mean, it was a really choppy day for all the markets, really. But okay, let's go through this again. Today is the 21st day of August, 2020. And we picked up 12 ticks on 12 ticks on crude and 12 ticks on the ES. I'm sorry, 12 ticks on gold and 12 ticks on the ES. So put us at plus 270 per contract on the morning. Today it took 16 minutes and one trade to get to the goal for the day. At that point, we're up $150 a contract, and we took a total of 2 trades this morning. Now, we actually took 4 trades, and we were up more than 270. We were about 370. But anyway, on the month, we're at $7,988. That's over 15 trading days, averaging $532 per contract per day. Now, 130 days consecutive, getting the goal. And on the year now, we're at $61,299. That's over 155 days, averaging $395 per contract per trading day. If you have not taken the free trial and you want to, there are several ways to do it. I know there are just so many ways to do it. When you go to the homepage at CFRN.net, right here it says free 5-day trial, no credit card required. Click on that, and you'll be brought to this page where all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge, so we can tailor one-on-one training just for you. You can also just go to EminiFuturesTrading.com and follow the instructions on that page. Okay, and so it's, you know, taking a free trial is really easy. All right, and it doesn't cost you anything. We don't ask for anything up front when you take a free trial. Okay. All right. That said, we can pass it back to Studio A in Phoenix, Arizona, overlooking South Mountain, America's largest city park. And Dwayne is ready.
Recap of the recap.
Today, 16 minutes, 1 trade, $150 a contract.
Good job.
Thank you.
All right, guys, as it says right here on the screen, if you want to get started, you want to be trading with us live in real time, you in the simulator, of course, because you're brand new. Sunday night, 6 p.m. Eastern. That's when the market's open, not Monday morning at 9:30 a.m. Eastern. No. That's for the lazy folk. Us futures traders, we go to work Sunday night, 6 p.m. Eastern. If you want to join us, if you want to be a part of that, go straight to EminiFuturesTrading.com and get started today. All right, let's take a look at the Logic 247 alerts so far this week. We are in week 107. We issued a total of 99 alerts so far this week. Now the day's not over, so we just might issue a couple more this afternoon. 26 of those never triggered. We give them a couple days, and if they haven't triggered, we just write them off because the market is obviously headed in the other direction. We're still waiting on the results of 6. That gives us 67 actionable alerts. Out of those 67 actionable alerts, 13 were stopped out. That's 19% of the actionable alerts. Now, a stop out is based on not risking more than $300 per contract, per trade, less when possible, based on a very simple 3-step methodology that I teach every one of our traders based on market structure. So again, this week, 99 alerts total, 67 actionable, 13 stopped out, and what we've averaged over the last 107 weeks is 20%. So it's a good week, okay? Now, those are the logic alerts. We'll go through them one by one here in a bit. Those are based on current price action. Our other alerts are based on historic price action. So I'm going to drag those up onto the big screen and give you a chance to take a screenshot of those because we're going to walk through these one at a time. Now, I was late getting them out last night, and thanks to, I think Brad it was, in the workshop, who reminded me that I still hadn't got the alerts out. These come as a static report. The logic alerts, those come as opportunity presents itself, live in real time. This list comes out normally at the beginning of the Globex session, usually somewhere between 6 and 6:30 p.m. Eastern. These numbers are good for the entire session because important prices and important areas are almost always tested. Many days we see these trigger not once, not twice, sometimes 3, 4, 5, 6, even 7 times or more. Depends upon the structure of the market. Okay, now some you can't see down at the bottom: Canadian dollar, euro, British pound, silver. Okay, now we'll head to the chart. We'll start out for just a moment on the daily chart. Okay, okie doke. We put in we've got an all-time historic high above us at 33.96.50. That's based on the price of the current December, or the current contract that we're trading here. We're in the U contract. Now, see that swing high, 96.5. This swing high, 95.75. So we came within 3 ticks of the all-time historic high in the S&P, and the market failed. It would be very unusual to see us fail here without at least touching that all-time historic high. If we base it on what's happened in the past, we would see some pretty choppy trading up here, maybe an attempt to run higher, and then eventually buyers are going to take their profits, and when buyers stop buying, price will retrace, and the BBC, which just stands for Bull Bear Cross, and I'll show you why it's called that. When price is above this green line, price always reverts to the mean. In our case, with our methodology, it just so happens that our mean is green. Okay, so as you can see, when we're above it, we anticipate higher prices. This was an all-time historic high when price could go no higher. When buyers stopped buying, price retraced or pulled back to the BBC, which we expect to be good support until it isn't. It was, and it sent us up to a new all-time historic high. That's that 33.96.5 number. We then pulled back to the BBC. This was a Sunday night. We gapped lower on the open. Okay. Now, this happened way back in February. It was last week or the week previous that we finally closed this gap. There was even a little tiny gap right there that had gone unfilled. That's very unusual for index futures. Now, once we got below the BBC, after months and months and months of climbing, we got below the BBC, and down we go to March 23rd. That was the pandemic low. And then the recovery process began. When price can go no lower, that's support. It will go look for resistance. When we rise to the BBC, we expect it to be good resistance, and it was. So we put in a nice leg right up to the BBC, then we had a retracement, then another leg, another retracement. On this retracement, we had support at blue and climbing. Now the technical name for this indicator is CFMA1. That's a lot to say. I call it red and falling, blue and climbing. This represents bearish market conditions or resistance, whereas blue and climbing, bullish or support. So as we pull into blue and climbing, we find that support. That takes us back up to the BBC. Now this time we couldn't get through. This time we couldn't get through. Finally made it through, closed on the other side, and that began the pandemic recovery. Now, when I say price reverts to the mean, always, here it is. We get a leg and a retracement. A leg and a retracement. A leg and a retracement. And on this leg, when we ran into this area of resistance, once we took out these swing highs, the market went on quite the rally, big leg, right up to this area where we expected to find good resistance. We did. Why did we expect that? Because over here on the daily chart, it was good support on this big pullback. So you've probably heard it somewhere or read it somewhere. It's kind of technical analysis 101. What was once support becomes resistance, or the floor becomes the ceiling. You've heard some variation of that, I'm sure. So we waited patiently for a few months. We got to the area. We found the resistance we anticipated. Resistance sent us back to support at the BBC. We got to the BBC. Support will send you looking for resistance, which, remember I said red and falling, represents bearishness or resistance. We spiked at 1, 2, 3, 4, 5, 6, 7 days. Buyers finally got us back above the BBC. Red and falling became blue and climbing once again, so we knew exactly what to expect. Another trip up to this resistance. We got there, and you see on this wick that's touching that area, it sent us right back the following session, right back down to the BBC support. It sent us back up to resistance, which we got through here, here, here. Now, what's this resistance all about? Bearish cross. When you have a bullish or bearish cross that leads to a significant or substantial move, which this certainly did, that becomes an important price, important area. So when price gets back to the area that's represented by the cross, we expect resistance. 1, 2, 3 sessions we couldn't get through. So we pull back again to the BBC, and then off we go. This time we make it through. We get all the way up to this area, which represents the all-time historic high. So we've been battling for 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions trying to touch 96.5. Swing high today, 93.5. Okay, and we're off the high of the day. Now price is currently trapped between blue and climbing and the step line. Okay, so This represents resistance above. This represents support below. So price will ping around in here until we either touch that high or we break down, and we will get a retracement back to the BBC because price always reverts to the mean. Now, if we throw some fibs on here and look at just the last leg up, okay, that would be from this low to that high, from there to there. I drew this in this morning, this little rectangle. See, that's a low, swing low, swing low, swing low. That lines right up with where the BBC is. So there's a magnetic attraction there. Whether we touch 96.5 first or not, eventually we will come back to the BBC. The question is will it hold the pullback? Now, we saw it hold the pullback again and again and again and again over here, and again and again and again. At some point, it's not going to hold. That means we're going to head for the shallowest Fibonacci retracement when that happens. Now, currently, based on the swing high, that 24% fib is at about 32.96. That's an area. A deeper retracement would take us down here, and this is the one that looks really interesting, because this swing high, if you follow it across, I'll drag that across. That's right at that 38% fib. Now again, we're measuring just the last leg up, not the entire move, which began at the pandemic low. All right. So from the daily perspective, price will attempt this 96.50. I don't think they're going to give up until they at least touch it. Historically, what happens after you reach an all-time historic high is you get a failure to some degree. The shallowest retracement would be back to the BBC, and below that, this 32.96.97 area. So let's go to the smaller time frame. This is where we put on and take off trades on the 30-minute chart. These lines that you see on the chart, these are our weekly trading zones. Okay. Now we've published these zones since December 14th of 2009. Think of them as fixed support and resistance. They come out Monday morning, 6:15 a.m. Eastern, and once we publish them, put them on the chart for the week. We don't change them, massage them, manipulate them. They stand. Now, yesterday, we had an alert. Price came down through 33.61. Here's a weekly zone. Only three things happen at a zone: consolidation, rejection, or the slice. The most common thing is consolidation. You'll see that again and again. The second most likely is this one. That's rejection. The third and least likely is when a candle slices through the zone like it's not even there. When that happens and that move runs out of steam, what typically happens is price will then retrace back to the zone it sliced through. And in this case, if it finds good support, then that gets us going to the next zone overhead. As we approach it, we expect it to be good resistance. It was, so we got a retracement. On this next attempt, we got through, and then the market made a beeline for the zone overhead at 33.96. We did not quite make it. Here we are. We still haven't made it. In between these two zones. And the market this morning has been a difficult market at best. It has done the things we discussed in the pre-market strategy session. Here is a real good example of the zones at work. Now, we had an alert to be short 33.61, which took us down to the zone. That was the trade to target. That's 9 points at $50 a point. It's $450 per contract traded. We triggered once, we triggered twice, we triggered 3 times. Same alert, 3 triggers. Zone to zone zone, to zone, to zone, to zone, and then we made it through. The slice got us through, took us up to the next area. Now, last night's Concierge Trade Alert, now this is the static report, the one you just grabbed a screenshot of. It said to consider being short at 33.69. And 33.69 is right here. That's 33.69. Okay. So, when the Concierge Trade Alerts come out, best thing to do is to go to your charts for the markets that you trade and put a line in the sand. So the line in the sand on the short side would be 33.69. Now the trade to target is 33.65. On a short, the trade to target, now on the logic, you may have 1, 2, 3 targets before you get to the final trade to target. On the Concierge Alert, you're just looking at that zone below on a short or the one above on a long. So from 69, we traveled down to the zone at 64.65. We actually spiked it, but we never pulled away from it to the downside. You can see that this candle's touching the zone, this one. Now, leaving this kind of a tail below a zone, that's a very bullish indication if you speak candlesticks. That move took us back up to the zone overhead. Now this is another slice. Again, that's the least likely thing to happen, but here we've saw it twice in a couple days. We slice through the zone, then we pull right back into it. That's what this wick represents. We found support. Remember, it failed to be resistance, so now the question is, will it be good support? And it was. And it took us up to this swing high, which we talked about in the pre-market session. Potentially good resistance. It has been. We had an alert sitting right above it in logic, and we spiked, I think, about halfway through it, and then it failed. We were looking at this next area as potential resistance, and then this area as potential resistance, which would put us within striking distance of the zone overhead and the all-time historic high. Now, the long side last night was 34.01, which obviously we've not got to yet. 34.01. But this is the best way to handle the CTAs when they come out. Go to the chart, get your 2 lines in the sand. This is a last week zone, that's why it's in yellow. Okay. So before any of this happened, you got 2 lines on your chart. Sell 33.69, buy 34.01. Okay. Everything between these 2 lines is basically the market trying to make up its mind what it really wants to do. Now that doesn't mean you can't trade in between these areas, because you certainly can. And that's where the logic alerts often come in. They'll walk you right up to a CTA, and then often there'll be a logic alert that coincides with a CTA. So you've got 2 different methods pointing at the same important price, important area. And that's where you'll often find your highest probability, lowest risk trade setups. Okay, so we came down to the zone, found support, back up. Now the price looks like it wants to push up through this window of opportunity again. I would be very cautious here, because you see this sideways? I mean, we've had movement. We dropped from this area almost back to the zone, but not quite. And now we're trying to climb through it because of that wick right there. That's new potential resistance. So I'd be very cautious trading in this area. If we get above this swing high, the distance 91 to 93.5, you've only got 2.5 points there. So that's pretty tight quarters to try to clip your couple points for the day if that's all you're looking for. So I'll just leave you with that. Be very cautious on the long side. If we get above this swing high, then that would be, I don't know, 94. If you get that close to the zone, it is a very high probability that you'll reach the zone. So if I were going to take a trade anywhere in this area, that might be it, 94 to 96. But keep in mind, zones are an area. Now we get accustomed to seeing price turn at the zone over and over, okay? But that's not always the case. Sometimes we'll come within a couple ticks. Sometimes we'll spike it like this. So always think of it as an area, okay? All right, that covers the S&P. Let's look at the Dow. Last night on the Dow, the alert was to be short 27,560. And the trade to target was 27,475, the weekly trading zone. On a short, it's always a zone below. 27,560. 27,560. Okay. So from 27,560, we traded right down to the zone. The swing low was 473. Now the zone that went out to all of our members Monday morning at 6:15 a.m. Eastern. Here we are on a Friday, the 21st. Can you see how price handled the zone? That's rejection. Remember, it's three things. Consolidation, most likely. Rejection, second most likely. The slice, least likely. But it happens. Now, here, this is wide-ranging consolidation, but that's what it is. Consolidation, okay? Preparing for the next move up. If we scrunch it up, and if we look left, we can see where we might run into potential resistance. This swing high. That's what that little rectangle is about, okay? Then there's also potential resistance up here. Now, the long side of the Concierge Trade Alert was 27,865. We've not gotten there yet. But if you traded the short side, then you don't need it to get there because you already got your goal for the day. 27,865. Now down here, from 560 to 475, what's that? 90 points? 85? Oh, call it 80 points. At $5 a point, that's $400 per contract traded. And the long side, still waiting on the trigger. All right, let's go to the Russell. On the Russell, last night's alert was to be short 1557, which is right here. We consolidated at the zone. We dropped to the trigger, 1557. Oh, come on. Okay, we may have another move cooking here on the Russell. All right, so we got right down to the trigger, price retreated. Got down to the trigger again, price retreated. Got down to the trigger, consolidated a little bit. This would have presented an opportunity to be short at the trigger with a very minimal stop based on market structure. Once we triggered at 57 on this move, it took us down to the zone where we consolidated. Price Once it finds support, we'll go looking for resistance, which it found at the zone overhead. Once price finds resistance, it's going to go looking for support, which it found at the zone below. Okay? So from 57 down to 50, that's a 7-point move at $50 a point. It's $350 per contract traded. And then it triggered again and again. So there was actually 3. Now, these, okay, the swing low here was 56.60. It actually went 4 ticks over the line. Okay, so you have to determine how you're going to handle price approaching ACTA or even a logic alert. And that's what the one-on-one mentoring sessions are about, so that I can help you learn how to read the chart. Now, we do use a smaller time frame to help time those entries. We want to make sure that the flow of the market is in keeping with what we see happening on the screen. Example, price is dropping right into an area that, based on what the chart says, it'll be good support. Okay? Now, if we look left, the last time we were down in this area, we had a pretty smooth move. We've got that resistance, and then we've got this area right here. And then this area below, starting at 1541. Okay? So, 1541 to 1539, initial target. And then from 39, we really don't have anything in our way all the way down to the zone. So we'll say 1533. Okay? Now, that's if price takes out this support and takes out this support from way back there. Then we have a window of opportunity from 1541 right down to the zone. Now, because zones are an area, there's no guarantee that price is going to physically touch the zone. In most cases, it will, but you see right here is an example. Here's another one, right? Price got almost to the zone. Buyers came in, ran it back up. Same thing. Almost got to the zone. Buyers came in, ran it back up. Where it consolidated for many hours. So you have to be patient here. There's nothing to do at the moment. We need to get below this support, and then 1541 to 1539. Final trade to target, zone below 1533. Okay. On the long side for the Russell was 1577. Way up there. I'd be real surprised if we saw that today. I don't think we will. Let's go to the NQ. Okay. Alright. Now the alerts did get out late last night. It was 11:45 p.m. Eastern. So let's find midnight. Right there. So on this little candle right here, this was when the alerts came out. And the alert for the NQ was to be short 11,366, which we haven't seen, or to be long 11,557, which we hit 558. We went one tick over the line. Buyers would not support it, and we dropped right back below the zone. Okay? All right. Let's go to Crude. All right. On Crude, the alert was to be short 42.30, which is right here. Now this morning in the pre-market strategy session, that little circle is, I said, in a perfect world, price was dropping here. We're on this candle, but what we were hoping for, or I was hoping for, was a pullback to the BBC, which I'll put on the chart and show you. But let me do the alert first. It was 42.30. So 42.30. Down to the zone at 42.15. That's $150 per contract traded. Price got back above the trigger, did it again. Got back above the trigger, did it again. So 1, 2, 3 triggers to the target and beyond. Okay. Now, there's no reason that you can't stay in a trade like this, but most traders are going to take their profit at the zone because we expect that to be good support. The more experience and time you have trading, you'll learn to read the chart and you'll know when, maybe it's a good idea to just stay with it. Okay. Using market structure, you didn't have to deal with much risk to position your stop loss on this move. And from 42.30, we've dropped all the way down to 41.40. If price continues to drop 42.30 to 41.30, that would be $1,000 per contract move. When the price of gold changes by $1, that's worth $100. When the price of crude oil changes by $1, that's $1,000. When the price of silver changes by $1, that's $5,000. Okay. The long side for crude was 43.05, and I don't think we're going to see that today, but keep it in mind because Sunday night it could be beneficial. Although crude's going to have to do a whole lot of work to get us back up above that $43 level. Okay, now we were just there back on the 19th, 2 days ago. All right, so that's crude. 1 trigger, 2 trigger, 3 triggers on alert. Okay, now let me put this on here, this and this. So, what I was hoping for was a pull back up to the BBC. I think that's why I might have put this little line in here. I was hoping price would just pull right back into this area, touch the BBC, and continue down. When there's a lot of momentum in the market, bullish or bearish, you get a leg, support. I wanted this retracement. I wanted this retracement to come all the way up and touch the BBC, but we don't always get what we want in life. But that's okay. We closed red. We opened down through the trigger. That trigger took us from 42.30 to 41.85. So that's a $400 per contract move on that second trigger. And then the third trigger was the biggest mover of them all. Okay, so we've covered the S&P, the Dow, the Russell, the NQ, crude. Now let's look at gold. I see your question there, Mike B. Hang on a second, I'll do that for you. Okay. Gold. All of these charts are 30-minute charts. Consolidation, down to the zone. Consolidation, down to the zone. Even this is consolidation because these are 30-minute candles. So if you're looking at a smaller time frame, you'd see a whole lot of little candles across here. This represents an hour. And then support sent us back to resistance. More consolidation. Back down to support. Back up to resistance. Consolidation. Right up to the zone. See, sometimes we get lulled into a false sense of complacency by things like this. Price turns on a dime at the zone. Drops to the zone. Turns on a dime. Starts heading back up. Now again, these numbers were set out Monday morning, 6:15 a.m. Eastern. We've sent them to our traders since December 14th of 2009. The indicators on the chart, think of those as dynamic support and resistance. The weekly trading zones, because they're carved in stone for the whole week, think of those as fixed support and resistance. And price is going to move from one to the other. Now, some people will tell you that, well, you can't. This is the modern age. Support and resistance, that's kind of horse and buggy, don't you think? You need algorithms and advanced decline lines and the trend and the tricks, the tick, all that. Well, nothing wrong with those things. I'm sure that they work very, very well for the folks that use them. We just don't have any need for them with our very simple strategy. Price is always trying to get to a weekly trading zone. From the moment the markets open Sunday night until they close Friday afternoon, price is marching. Sometimes it will march sideways, but when you put the indicators on the chart, you get a real good idea where it's marching to. Like here, after this consolidation, price got below the BBC, bull bear cross. See, bullish cross, price goes higher, bearish cross, price goes lower, right? So price gets below the BBC, we anticipate lower prices. When accompanied by red and falling, we definitely anticipate lower prices. Red and falling, change to blue and climbing. We don't trade this little area here because we don't do counter trend trades. We need to see price get back above the BBC, which it did here. Ran right up to the zone at 54.55. Resistance sent us back to support. So we're right at the BBC. We've got blue and climbing. All we need to do is get above this step line, and then we'll have a nice window of opportunity right here. Okay. Now, either one of these two indicators could potentially serve as resistance. Although I told you blue and climbing represents support or bullishness, it does. But we still want to see price get above those because we want our support to be below us, not above us. So if price can trade through both of those and take us up to 1949, and from 1949, nice trade up to 1953, 4 points, $400 per contract traded. I'm not going to take the time right now to do an official alert, but I'll share it with you. 1949 to 1953. Okay. Now some might say, well, if you think it's going to go to 53, why not just get in now? Well, because you have potential resistance overhead. What we want to do is we want to find areas on the chart where there is no obvious obstacle in our path. Here we clearly have two potential obstacles, but if we can overcome those, then now support and resistance can show up out of anywhere at any time. However, if you can eliminate trading in areas where there is obvious support or obvious potential resistance that would get in the way of the direction you're attempting to place a trade, you'll save yourself a lot of grief. Now, you'll see there's very, very, very possible that this candle will come right back into the zone because it's not able to overcome this resistance initially. Let's blow it up a little bit. So from here, one of two things. Price will come back to the zone find support, and then make another attempt to get above these two. Or price could come back to the zone, and this time the zone fails to hold. So then, once price gets below this swing low, then we have a very nice window of opportunity down here. Okay? And being very conservative, I would put it right there. Okay? Now, some people just want to sit down and make money right now. Okay. However, if you exercise a little discipline and a little patience, I think you'll see that it really will pay off for you. Here, just a textbook trade, bullish cross, right? We had a leg up, we had a retracement. That retracement engaged, that created this bullish cross. So once we start printing green, okay, on this candle, now we've got the step line overhead, which could be potential resistance, as could this. In hindsight, it's very easy to see that it just glided right through them, but that's not always the case. We're dealing with an almost identical situation over here. So while this was a beautiful move, it's probably not a trade that I would have taken because of the potential obstacle. So you're always looking, where is there an obstacle? If I see what looks like a good trade setup, what could cause that to go wrong? Now, again, there are certain things that are unknowable. There's no way for you to know when some institution's going to show up with 1,000 contracts on the bid or 5,000 on the ask. You don't know these things. And so many people spend so much time and so much money trying to know things that are unknowable. You've got to let go of that, and you have to focus on the things that you can know. Okay? So what can we know here? We can know that this area right here is potential resistance. We know that if we get above that, we've got a pretty clean shot at making it back up to the zone. However, since zones are an area, we're going to cap it at 53. Okay? If price should head the other direction, with futures, doesn't matter if the market's climbing or falling. Your only concern is that it's actually moving, that it's, trying to go somewhere, not just consolidating sideways. People try to trade this and they get in trouble. Okay? Now, when you see these indicators go flat like this, right, it's a market you don't really want to be in. What you're looking for are moves where the market's actually building legs. Leg and a retracement, leg and a retracement to the zone. This time it didn't come all the way back, came back to the zone, and then another leg. Now this swing high was 63.1. This swing high, 63.1. The double top there. And then after that double top, we put in a lower high at 59.1. We get our bearish cross, price gets below the weekly zone, and then price, because we're below the zone, because we're below the BVC, we anticipate lower prices accompanied by red and falling. Okay? That's the story on gold. Here comes silver. Hi ho. We had a bullish cross that took us almost to the zone. Had a little double top right there, a lot like gold. Then we had a bearish cross, took us down to the zone, and we've been consolidating here. We got our pullback to the BVC, which we expect to be good resistance. Now we're working on a leg to the downside. On gold, I forgot to go over those numbers. On gold, the alert was to be short 1947. 47. Hey, I nailed it almost. If I nailed it, I mean getting the line in the right place. So 1947. The initial trade to target, or the trade to target in this case, is the zone below. It's always the zone below on a short. On a long, it's the zone above. So from 47 to 42, from the published entry to what we know is the intended target, $500 per contract traded. But it wasn't done because the zone represented support. We bounced, got back above the trigger, dropped again. Okay. And this time we sliced. Now, again, when you get a slice, in other words, we expected support. We had support on that candle, support on this candle. This candle did not give us, or this candle and this zone did not, we didn't get the support we anticipated. So what happened? Price pulled back up to the zone, consolidated, and then continued in the direction of the slice to the next zone below. That's very typical behavior, sort of picture perfect when you have the slice. So from 47 down to the swing low, 1916, well, let's just call it 1920. From 47 to 20, that's $2,700 per contract traded. However, getting out at a swing high or swing low is very difficult because you don't know it's a swing high or swing low until after the fact. Now, we use what's called an exit signal on an extended move to give us a good idea of where we should consider taking profit. This was a really unusual one here. The step line, you see as we're falling how it's on the left side of red and falling? We poke above it. Finally the step line crosses. So if we had had a green candle here, the close of that green candle would have been the exit. But we didn't get the exit signal. We kept dropping. This is what you don't want to let happen, okay? When you get an abnormally large candle like this, it can take back the whole trade. Under normal conditions, this green candle would have been somewhere right above that step line, and that would have been where you take your exit, okay? This one, this is unusual. I mean, we covered this much ground in 2 candles from 1915 back up to 1947. That's a lot of movement. Now, we talked about this window of opportunity up here. We talked about getting above these, okay? And here we go. 1949, 1953. That's the swing high so far. 48.20. All right, so we'll check back on that in a minute. All right, there's John. We'll talk to him for a minute, and then I'll go over the remainder. I'll go over the Logic 247 alerts with you. We just went through all of the CTAs. Hey, John, welcome to the show.
Hi there. Thanks for bringing me on. You know, actually, today is a little bit of a mixed day, number one. But the Dow is going up like we said it would yesterday. I got a pretty strong buy signal on the Dow, and we're going to see the Dow, I think, go up possibly, consistently for the next few days, maybe throughout this Republican week. Could go up 1,000 points or even more. The Nasdaq is obviously again at an all-time high, and Apple is only $10 away from my $500 target today. It's up another $20 or so, which is incredible. I Just one sec. Sorry, I'll be back to you.
Okay. All right. Let's do this.
Sorry. So
All right, go ahead.
the the rest of the fangs coming off a bit right now. I mean, we're in a very delicate kind of a situation here. Tesla's making new highs as well. So, you got, I think somebody coined the phrase this morning, Lizanne Saunders from Schwab, called the something 8, the grade 8 or something. There's about 8 major stocks pushing the NASDAQ higher, basically. But, it's not a lone parade, if you like. There's a lot of NASDAQ stocks going up in spite of it all, they're continuing to go higher. Now, the bad news is the mid caps today are getting hit pretty hard. It doesn't mean to say it's the end of the bull market, but they're negative, and that's not very often before a pullback, the mid caps are the first to go, the soldiers, remember. At the beginning of a bull market, the mid caps are the strongest. They lead the market higher. And the generals in the Dow are the laggards. And of course, the NASDAQ is a key component because the NASDAQ also has to be the leader. So when the mid caps and the NASDAQs are leading the charge, it's basically a bullish scenario. But when you get to the end of the road and the soldiers, the babiest, the smallest indices, being the mid caps, are suffering as they are today, that's when you have to be pretty careful, because we're down 14 points on the Russell, down 11 points on the mid cap. How come we're up 51 points on the NASDAQ? It's kind of a negative divergence situation, actually. The other thing that's bothering me today is the semiconductors. They're actually picking up a bit. Yesterday Intel announced a stock buyback of 10 billion, and the stock actually went down from the early highs. So not a very good response, at least to begin with. Mm-hmm. One thing that's really bothering me is Micron, MU. That is approaching its March lows, which definitely does not bode well for semiconductors, and is probably a leading indicator. This is a very sensitive company because it's really talking about chips, and memory.
Yeah, I posted an article the other day in one of our Telegram channels. They say the price of RAM, and what else was it? RAM and something else. They expect prices to plummet. Let's see if I can.
Right, and it's I mean, look, this is a serious development. This company here in the last basically this month has taken quite a hit, and we're going into the end of the month, and it doesn't look good on a monthly or weekly or even a daily.
Here's that article, John. RAM and solid state drive prices will soon plummet due to oversupply and weak demand. Something to look forward to. I mean, if you want to upgrade, they say now's the time.
Yeah.
And already the price of RAM has come down so much compared to what it was back in the day. Upgrading the RAM in your computer was an expensive venture, but now not so much. And they're talking about it coming down even more.
Well, it's good news for consumers because
yes, it is.
Computers are getting cheaper all the time, and when Intel does get to this new architecture, I mean, some of their prices for chips, as you know, are crazy high.
Yes,
and maybe they'll start cutting some chip prices soon too. But Nvidia, we might as well take a look at Nvidia, because
will. I was just looking to see what this i9 chip was going for today. The new 10th generation i9 chip, which will launch in November, starting at $590 up to $979. That might sound like a lot, but it's actually a huge bargain when you compare the pricing to last year's 9th generation, which still retail.
See, let's check out the price of the 9980 Extreme.
Let's see if it's on this. Let's see what this brings up. This might show us. Now, which one are you looking for? The Extreme, right here. $979.
The 9980 Extreme. I'll have to check with our computer company to see.
Here's the 10980 XE Extreme Edition, $1,000.
Well, if that's the new price, that's a lot better than the other one. So that could be a big deal. Anyway, I'll have to give him a call and see what
It says other features include support for up to 256 gigabits of RAM, which is twice as much as last year's line. That's a big deal.
Yeah. I can't remember whether mine is 256. I think it is 256. We put in there. So, and I'll have to talk to this other guy because it's hard to keep track of the Ryzen. The AMD.
Here's the AMD Ryzen is already. The 3900X is already in the market. The 12-core processor has received rave reviews and is in such high demand that the $499 chip has been out of stock at many electronic retailers.
Yeah. No, it's definitely. We are. Yeah. Actually, as I think I mentioned to you, I was really having a lot of problems during the meltdown with the computer keeping up with the rate of change of all the stuff going on, but
now
thankfully,
sometimes those issues stem from the exchange level, but I'm sure you're aware of whether it's your machine or if it's the exchange, but
well, since I put that new chip in and got the memory up and got that other drive, the high-speed Samsung drive, it's really been incredible. I haven't had any issues at all. It's been great. So, but as you can see, we're coming off a little bit. I mean, the worst thing that could happen today, in all honesty, is, and the VIXs are going up a bit too, is to go negative before the close.
Here comes that trip back down again, guys, on the S&P. We've made this trip now once.
And I was thinking, also, getting into the end of a month and selling off on a Friday is a really bad. It's not a good thing.
No,
it can be. Now, I was probably the speech last night. To be perfectly honest with you, the first 10 minutes was probably where he should have stopped, but he went on and on and on, and it kind of got a bit boring towards the end. But the amazing thing today is that Trump is continuing to hold at the 51% on the Rasmus, and I think it's 47% disapprove now. This is a gigantic development. This has never happened before, as far as I can tell, in an election where a Republican president got a bump during the Democratic week. It's crazy. So it's certainly a good indication, and I'm pretty sure that the Republican convention is going to have a lot more razzmatazz
well, there's actually going to be people there. This was all pre-recorded, done in advance. They probably just told the janitor to turn on the VCR and play the tapes for everybody. I don't know if anybody was even in the building. Just kidding, but it was almost.
I thought the fireworks was a bit overdone, like fait accompli. You sort of celebrate fireworks when you win.
Yeah. I haven't watched it. I'm sure I will over the weekend. I'll see different clips here and there, but I didn't sit down and watch the whole thing.
Anyway, it was pretty boring, the whole thing. But
my goodness, they bring Bill Clinton on as the big moral authority. I mean, how, in what world? what parallel
Well,
universe
how
does
about
that
the
make
pot
sense?
calling the kettle black? The one president who never grew into the job was Obama, and he's trying to say that the most charismatic president in the history of the country, just about, that hasn't grown into the job is like, I mean, what planet is he on? This guy grew into the job faster than anybody else, and he's got he's got a.
Yeah, Trump
I think
is not
the
a career
theme-
politician. I think people, forget that. Joe Biden's been in D.C. for 40, 50 years. What has he done? What has he accomplished? What has he changed? Nothing.
Yeah. Well, the theme that I think Trump should be pushing is, the promises kept, because he really has delivered on just about every promise, and that he's, it's going to be more of the same. But I think he could really actually make a clever kind of a coup, if you like, where he should emphasize that not only do all lives matter, it should be a 1, 2, 3 statement, sort of borrowed from the theme of "Make America Great Again" and "Keep America Great," but that all lives matter, and to that extent, we want every life to. I'll make it my mission in the next 4 years to make every life better, and not just better, but better than ever, and better and safer for everybody. I think that's a very strong theme to push, and it kind of flattens it just like sucks the oxygen out of all the stuff that's going on with the Dems, especially the safety,
Right.
that would be a very good approach, and but I think they've got to show all the accomplishments and say, this is, only half of what we're planning to do. We're going all the way in the next, in the next 4 years, and it's going to be the best. You only live once. If we don't make the next 4 years better than ever, we're wasting it. We're not delivering. I think that's a very strong theme to put out there.
I agree.
So,
I agree.
the Zooms of the world and the triple Zs, I think, are very close to reversing here. I don't know whether you put NVIDIA up, but NVIDIA, it's worth looking at NVIDIA.
Yeah, give me 1 second.
While you've got the gold up, I actually think the gold is kind of acting quite well today. It had an early dip, and it looks like it's put in what could be, it may have bottomed already. You have to keep that in mind. I think I mentioned the platinum yesterday as being a really super buy if it gets down near 900, which it did.
If
and
we
it's
close out this
925.
month with a red candle, that's it's not the end of the world, but it means we're probably going to pull back to the BBC here.
I don't disagree. Look, we could have a bit of a rally into Sunday, Monday, and then have another reversal down. Obviously, that would be a problem for the metals, because
there's plenty of time left in the month for this thing to close green.
Yeah, if we take out the lows of the last 24 hours, I think we're going to take quite another leg down of some severity. So you have to be ready for that. But if you look at the daily, if you can switch to a daily, you might see why it could actually go higher from here. You see these two, like you had that first spike, right? And then you had a rally, and you've got this second developing spike. Now, it's hard to see this market going back up above 2,000 against the down day of a couple of days ago, but stranger things have happened. So, but you can also see how rolling over from here and taking out today's low would be probably, definitely put us down towards the 1875 again, and possibly actually much lower towards the 1800. I mean, I think there's a lot of support around 1800, maybe 1750, if it were to get down as much as that. Then I think after that, you could
we
really go.
consolidated in this area right here from April 9th up through June
there's
19th.
got to be a ton of support there. But
Yes.
the worst case scenario is just like if we did have a kind of a meltdown, a March meltdown, you could probably see this thing going back to about 1600, briefly, and then maybe going up dramatically after that. So, I think you've got to be very open-minded as to what could happen here in the next month or two. The last couple.
If that support doesn't hold that we just talked about, John, then right here, 1596, 97, for us, that would be our next area of support. If this can't hold. And that's right below the number, what did you say, 1600? So it's basically same thing. It's
if it came anywhere back to 1750 to 1800, it really would be very, positive, because I think it would, be like a, potentially a wave one or some sort of a third wave of a 1-2, and then we come back three waves. Potentially the next is a third wave that could take us to 2700, and the likelihood of that is pretty high. You almost can look at this gold market today as being like where the stock market was maybe 3 or 4 years ago, when it was just lifting off. And remember, the gold does lag the market by years, generally speaking. So as far as look, the vaccine stocks, they really have kind of lost their mojo. BNTX opened higher this morning. I had that one. So
what's the symbol?
BNTX.
Here we go.
This is, look at where it was, right? It was 100. This is with the joint venture with Pfizer. It's a German company, and they're really talking about being the #1 contenders in terms of just a second.
Okay, let's do this. All right, we're in week 107. This is week 106, last week. We had 93 alerts, 67 actionable, 8 stopped out. 12% of actionable alerts stopped out based on not risking more than $300 per contract per trade, less when possible. That was last week. This week began Sunday night at 6 p.m. Eastern. The first alert out of the gate was gold to be long 61, initial target 63, second target 64, next target 68, and the swing high of that move was 68.50. So that's a $750 per contract move. And we had a stop out on crude, and then we had a $400 move here per contract on the Dow, just stop out on the Russell, and then we had a nice move on the NQ, stop out on the S&P. S&P made it to the target. Actually, the swing high was 75.50. And we had some no triggers, British pound, euro, and then that rolled us into Monday morning. Yeah, go ahead, John.
Yeah, so the Dow continues to push a bit higher, which is what we're expecting. Even the mid caps are picking up a little bit here. So even the fact that they had this early sell-off, if they, the more they recover today, the more likely is we're probably going to have a further up push next week. And you remember we got this Wyoming meeting too coming up. So there's a lot of stuff out there that could still, be just generally supportive of further upside in the market. Nobody can look. I was saying yesterday, I thought we were going to spike higher before this. It's almost like going to be a blow off. Who knows? It could be a blow off a week from now after the Republic convention. But Apple is already spiking in a way, so we certainly got vindicated with that idea already, and Tesla's spiking as well. So, Tesla, for heaven's sake, Tesla could go to 2,500 from here. I mean, you can't put the top on this thing right now. There's a lot of maniacs in this Tesla who are just like, they lost all sense of
One day,
reality.
the collective consciousness is going to wake up and go,
I mean,
wait
there's
a
some
minute.
bulls out there. Yeah.
It's going to be like somebody screamed fire in the theater, and everybody's going to rush for the exits.
Yeah, and actually, that don't forget that internet thing of Musk's.
Starlink. I've signed up now for the beta twice, and I didn't even get a return email. I'm sure they're absolutely swamped with requests.
That's actually a pretty big news item that's pending at any time.
That's huge.
And then maybe another SpaceX announcement or something too. All of these things are kind of helpful to the overall valuation prospects. So.
All right. Okay, John.
Yeah. All right.
Thanks. All right. Okay. Back to this. So we roll into Monday. There's silver, S&P, no trigger on the Dow, NQ. Swing high on this one was 276. The initial target was 255. So no trigger on crude. Had a lot of no triggers this week. 2 weeks in a row. It's because of what's happening here at the top. Markets behave a little unusual. Here's gold. Swing high was 2005. The second target. That's from 202 to 205. It's actually a $360 per contract move. There's the Dow and crude. Stop out on the S&P. Here's another Dow. Okay. Swing high was 27,904. NQ swing high was 335. The initial target was 328. Second target was 340. Now, of course, all members have access to these as they are coming, as they're issued. Now, this isn't a historic kind of thing. Oh, hey, look what happened. Well, it is. Hey, look what happened. But all of this information comes out live in real time to our traders before it happens, before the trigger. We provide the recap here so you can just see, what did happen, right? But this isn't like looking at a historical chart and going, well, you could have got in here or you could have got out over here. No. This is what actually happened. All of our traders were notified on silver. Consider being long. Buy 27.58. Initial target 27.60. Second target 27.67. Swing high was 27.94. From 27.58 to 27.94. That's about a $2,500 per contract move. It's just one alert. Canadian dollar, S&P again. Now 83 to 85. Swing high was 88.75. Here's the Russell. NQ, crude, stop out on gold, silver. Now we're up to the 18th. Okay. Now, because all of this information is readily available to anyone that wants to take a look, just get a hold of Valerie. I won't walk you through all of these and put you to sleep because I know you want to get off and get into the weekend. I just want to scroll through here and show you what it looks like. Now, ask yourself, whatever methodology or strategy that you use, would it be beneficial to you to have an around-the-clock service that shows you where the high probability, low-risk opportunities are? Over time, I think you're going to want to use our methodology and our strategy because of its elegant simplicity. But if you just wanted to use it as a supplement to what you're already doing, you won't hurt my feelings. S&P, okay. This was a short. It went from 85 to 65. That's 20 points. That's $1,000 per contract traded. The swing low was 65.50. The final target was 64/65. $1,000 per contract traded. If you've earned the right to trade 10 contracts, it's a $10,000 move. However, with us, if you're going to play by the rules, you got to put together 10 consecutive days in a row in SIM where you reach your goal in 10 trades or less. Once you do that, the 2420 blueprint will give you the green light to go live with just one contract. Your goal now is to increase the account balance by $2,000. Why? So that when it's time to add the second contract per the blueprint, you're adding the second contract with profit you earned in the market, not your savings. You got to fund that first contract with wherever you get your money. But moving forward, if you follow the blueprint, if you increase your trade size, it's always by 1 to 2, 2 to 3, 3 to 4. And each time you move up, you're adding with profit you earned in the market. And if the blueprint says it's time to add contract number 7, but you don't have the profit available in your account to add number 7, something's not right. So you need to book a one-on-one mentoring session. Okay, get together with myself, Michael, both of us. Let us walk through all of your trades with you so that you can sort it out. Okay. Now, these are trades from the 19th. Now, these are in conjunction with the Concierge Trade Alerts that we just went through. Okay. Here, from 82, the swing low was 77 on gold. Another gold was silver. S&P. Swing low here was 59.25. Target was 65. It went well beyond the target. Dow, Russell, Crude, Russell. Here's the Dow. This was a Dow that had multiple targets. Now, the idea was to be short 27.425. First target 405. Second target was 385. In the initial move, it only dropped to 392. But there's 2 targets, plenty of opportunity to get your goal for the day. More crude and Q. Again, this is all public information. Okay. Now, of course, the alerts live in real time only go out to the members. But once the trade has transpired, then the historical information, this is pushed out to anyone that wants to take a look at it. Everything we do is transparent. Everything that we do is fluid across all markets and all time frames. The results of the alerts are based on not risking more than $300 per contract, per trade, less when possible, based upon the very simple 3-step methodology that I teach all of our traders based on market structure. So, that brings another week to a close. Time for our good word for the day. Now again, if you want to be in the channel, if you want to go to work Sunday night, I'll set you up with the simulator, set you up with the indicators, get you all plugged into the Telegram channels. There's multiple channels, there's discussion groups, there's the channels where you get your alerts. Get all that squared away between now and Sunday night at 6 p.m. Eastern, because again, as you're learning the strategy, you're only going to be trading in the simulator, in the demo account. You have to prove to yourself, and I really want you to show me too, but I want you to prove to yourself that you understand the methodology, you understand the strategy. There is no good reason to put live money in the market with any strategy or any set of indicators that you have not personally proven out yourself. Sure, maybe this guy over here did great with the strategy, or maybe this guy over here did great with those indicators, but what did you do? Is it just throwing money at the market hoping something will stick? That's a surefire way to just blow up another account. And the reason you're here is because you don't want to blow up another account. So, you can get started today at eminifuturestrading.com. That's going to give you access to everything that we offer. The proprietary indicators, the strategy, the methodology, group training, 4 hours a day, 2 hours in the morning, 2 hours in the afternoon, unlimited one-on-one mentoring, weekly trading zones, Logic 247 alerts, Concierge Trade Alerts, access to the most extensive Emini training video library anywhere on the internet, access to the complete Mind of a Trader library, 170 episodes, and around-the-clock support, 24/7, 365. Your future as a trader is literally one mouse click away. And you're invited to come and hang out in the discussion group, meet some of our traders. You'll meet some of the guys that have been with us for years. You'll meet some folks that are brand new just like you. That's a place where you can build relationships with other traders, because trading can, quite frankly, be a lonely business. Having someone who understands the language, who understands what you're dealing with and going through. What you won't find there are a bunch of grumpy, complaining people. What you'll find are people who are learning important life skills. They're happy to share their experiences with you, and hopefully someday, as you begin to turn your trading business around, you will freely share. Scripture says, to whom much is given, much is required. So the starting point, EminiFuturesTrading.com. When you learn our methodology, when you learn our strategy, when you actually understand why the market's doing what it's doing. Not that you're always going to be right, because you won't, but you'll always know what the next high probability move is. And because it's a business based on probabilities, then it becomes just a matter of, well, is it going to do the high probability thing this time or not? Again, it won't every time. That would make it easy. Everybody would do it. Trading is not easy, but it can be simple. So get started today. Go to eminifuturestrading.com. I will see you Sunday night in the Logic 247 channel as we get down to business. Today's good word for the day: be content with your calling. Whatever calling you have on your life, you need to learn to be content. 1 Corinthians 12:5. There are different kinds of service to God, but it is the same Lord that we all serve. Now, most of our partners are involved in some kind of ministry. That's how they got attracted to the Christian Financial Radio Network in the beginning. We've got a lot of pastors. We've got preachers. It's two different animals. Okay. Maybe you teach Sunday school. Maybe you built an orphanage. Maybe you feed the homeless. If you're a part of a vibrant church, then hopefully you are, and hopefully you are plugged in to some kind of ministry. Whether you run the ministry or not, hopefully you're at least plugged in and participating. Because all parts of the body serve their purpose. We are the body of Christ, with Jesus as the head, but every part of the body has its function, even the little toe. That's my job. I'm little toe. If you want to be big toe, you can. One of the biggest mistakes that you can make, though, in ministry is to compare yourself to someone else. In fact, it's been said that if any two of us are identical, one of us isn't even necessary. I've said that all my life about business. When two people in business agree on everything, one of them's not necessary. Get rid of one, cut your payroll in half. In 1 Corinthians 12:5, Paul writes, "There are differences of ministries, but the same God." It's true that without help from others, you'll never become all that you can be. But God wants you to be mentored, not cloned. He's called each of us to emphasize certain truths at different times. For example, John emphasized love. Solomon emphasized wisdom. And Paul's major emphasis was grace over the law. The need determines the emphasis. If God calls you to be a pastor or church leader, it's like being a general practitioner. If he calls you to be an evangelist or a teacher, he's calling you to be a specialist. For to one is given the word of wisdom through the Spirit, to another the word of knowledge through the same Spirit, to another faith by the same Spirit, to another gifts of healing, to another the working of miracles, to another prophecy, to another the discerning of spirits, to another different kinds of tongues, to another the interpretation of tongues. But one and the same Spirit works all these things, distributing to each one individually as he wills. It's 1 Corinthians 12:8-11. Not everyone will understand or appreciate your style of ministry, and that's okay. It's not a popularity contest. The only one you're truly trying to please is God. You're called to be a servant, not a star. And a major prerequisite for ministry is that those who have been given a trust must prove faithful. 1 Corinthians 4:2, and that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.